Hi guys, welcome back to the video. In this very video, I'm going to be teaching you guys about the candle range theory. So I'm going to be explaining it in a way every single one of you watching this very video will understand it. And before the end of the video, I'm going to be showing you guys how I personally trade with this very strategy. It's a very simple strategy and it has a high win rate, right? Many of you click on this very video already know about the candle range theory. You already know it's a very good strategy, just that you haven't really understand it yet. And in this video, I'm going to break it down in a simplest term that every single one of you watching this very video will understand it, right? So now I just got myself a new phone, so that's why you notice the camera is now good. So I'm currently building up my studio, which I'm going to be doing video from time to time. So if you are new here, don't forget to subscribe. We're not going to waste time. Let's jump right to my screen now. I'm going to explain what the candle range theory is, right? I'm going to explain the power of 3. If you have heard of the power of 3, then I'm going to explain to you guys how I personally trade with this strategy. If you notice my screen, I'm currently in this very trade today. Today is Tuesday. I'm currently in this very trade and I've already won the trade with this same simple strategy. So guys, don't skip any part of this very video. And as you are watching, I will advise you to take notes, right? As I watch it, just take a note and start jotting down, because if you are actually able to watch this very video to the very end, you will start winning trades just the way I keep winning trade, right? For those who are in my group, you already know how we do things, right? My win rate is over 80%, right? I have over 80% win rate. All of you already know that. So if you're not in my group, the link will be in the description. But I'm not gonna waste time. Let's jump to my laptop now. Let me teach you guys how this bad strategy works. Now guys, what exactly is this candle range theory, right? What exactly is this candle range theory? It's just a sequence of candle, right? A candle sequence that provided with trading opportunity, mainly 3 to 5 candles, right? Just need 3 to 5 candles on a higher time frame, and these candles will provide you with trading opportunities, right? This is just what a candle range theory is. It can be 3 candle sequence, it can be 4 candles, it can be 5 candles. These candles now will form together to provide you with trading opportunity. This is what a candle range theory is. Just a sequence of candles that provide you with trading opportunity. Now, you don't know what a candle range theory is. Now, the power of 3. This is a key important aspect of this candle range theory, right? The power of 3. Now, what exactly is the power of 3? Right? The power of 3 is the phases, is 3 phases in the market, right? The accumulation phase, then the manipulation phase, then the distribution phase. This is just the power of 3 in the market. This is what we call the power of 3. These 3 phases in the market. Let me show you some real chart examples right here. So I've already indicated this. Now, the accumulation phase is just a phase where the market will keep ranging within a resistance level and a support level. Let's see something like this. I'm going to go back to a real chart and then teach it. But something like this, it will keep ranging from a resistance to a support to a resistance to a support. This is just a range. This is mainly what we call the accumulation phase. Now, this is a phase where those institutional traders, bigger banks, they are anticipating to buying or selling into this currency or into this market, right? This is just a phase they are now watching out to say, okay, we want to buy into this market or we want to sell into this market, right? Now, the next phase is the manipulation phase, which is the phase where they now look for liquidity, right? They will now look for liquidity in the market. Now, in this type of phase now, in this very type of phase now, you already know what's happening, right? You already know what's happening in this type of phase. In this very phase now, there's liquidity at the top, there's liquidity at the bottom. You should know that by now. For those who have been watching my YouTube video, you already know support and resistance has liquidity. So there's liquidity at the bottom, there's liquidity at the top. What are these institutional traders going to do? They're going to manipulate traders or manipulate the market in order to stop people out of the market. Now, the manipulation phase is this: when the price will push down below or above this accumulation phase just to hit stop loss, and after pushing below or above, it will now rally up, then go in its actual direction. Now, this breakdown or breakout is the manipulation phase, a phase where it's gonna go and hot stop loss, right? Looking for liquidity in the market. Then this phase, the distribution phase is the actual phase we want to trade. This is what we enter, or this is the trade we take and we distribute as the price is now in distribution phase. I believe you got that. The distribution phase now is when those institutional traders now get into the market. This manipulation phase is where they look for liquidity to enter the market. Then the distribution phase now, once they enter, straight up full TP. You want to enter once they enter. Now let's go over to a chart example. Like I said, mainly it's just a sequence of candle. That's what the candle range theory is. Now this first candle right here now is always the accumulation phase, right? Then this push up right here now is always the manipulation phase. Then finally you want to enter a trade with this distribution phase, right? So let's go over to our chart now. Let me show you how I personally trade this with some real chart examples. First thing first, go over to a daily time frame. So take your notes now and start writing it down, right? So start writing it down. Take your notes, start writing it down. You can pause the video, go get a note and write down. Now the first phase of this market is the accumulation phase. Now let's go over, let's start from the accumulation phase, where the market will keep accumulating. And remember, this accumulation phase is a phase where they are anticipating, they are budgeting if we are to buy into the market or sell into the market. And at that point now, the market is always ranging, right? At that very accumulation point, the market is always ranging. So what you simply do is you mark out the previous day high. Now I'm on a daily time frame, remember? Then I mark out my previous day high and my previous day low. Now what I will advise you is this: if you're going to trade this strategy, do what I'm doing now. Do this exact thing early in the morning, right? Very after the Asia section. After the Asia section, just do exactly what I'm doing and you will win trade with this strategy. You'll win more trade with this strategy, right? During Asia section, once we're about to get started with the London section, do this exact thing. So guys, if you love the way I teach, remember I break things down. If you love the way I teach, I have a mentorship program where I teach complete beginners how to start trading, right? I can teach you how to start trading to how you can become a profitable trader. Why? If you're already trading, you love the way I analyze things, you love the way I teach about strategy, then go for my advanced class where I teach you guys all of this strategy. All of this strategy is in my advanced trading section or advanced trading class. I teach you all of this strategy so you can easily become a profitable trader, not just to go over, fund your accounts and keep funding your accounts, right? Fund your account and withdraw, right? You already know, and keep making profit every single day. Now let's not waste time. If you're interested in the mentorship, there's a link in the description, so click on the link to join. Now the next thing is I head on to a 1 hour time frame, right? Now on a 1 hour time frame, now this is where I will now start looking for my trading opportunities. Now what I mainly do is I want to spot out the manipulation phase, right? The light, the NEPA just took the light, right? This is the accumulation phase. Then the manipulation phase is when the price will now break above this high right here now, just to hit stop loss. And mainly what I wait for is a break above the previous day high. This is the previous day high. Now I'm waiting for a break above this high, right? That's simply what I'm waiting for. And let's see what the price did. Let's see if a break happened now. Okay, the break has happened. So this is the manipulation phase. You should remember that. Now after this manipulation phase, now what am I expecting? A distribution phase. So I'm gonna just likely wait for a shift in market structure, right? A shift in market structure. Now this is a low, so I'm waiting for a break below this low right here. There's a low right here. Mainly my shift in market structure is always on a 15-minute time frame, right? Now I want to wait for a shift in market structure. Now the shift in market structure has happened. You can easily see this long wick creation now break below this previous low. So I'll enter for a sell from this point. Remember, what I mainly do is I enter for a sell in the next order block zone. After the shift in market structure, there is another block right here. So I always enter for a sell from the order block. Stop loss just slightly above the order block, right? Now, as a trader, my first target now is always 50% of this trade. So I want to take my Fibonacci and then indicate 50% of this trade, right? From my previous day high, what I simply do is from my previous day high or from my entry point, I drag it to the previous day low, right? Then once the price is at this middle, I take partial profit, right? The Fibonacci setting is this. Let me show you the Fibonacci settings. So you can easily give it the settings, the same settings I'm giving mine. So it's just the 0 is on, then 1 is on, then 0.5 is on, 0, 0.5, then 1. That's the only Fibonacci settings I have. Then this is my 50%, and once the price is here now, we'll take partial profit. So let's see how the price is gonna behave. Let's see how the price is gonna do. Our trade I just triggered, right? Our trade I just triggered right here. So let's see, let's play, let's see how the price is gonna react to this very point. So our trade has triggered right here. So I'm waiting for my first take profit at this point. So beautifully now you can easily see the trade is currently running in some crazy profits. So let's keep holding. Let's see. You can easily see the trade has been consolidating. Boom. First TP has been hit. Now without wasting time, now the first TP has been hit right here. Straight up. And this is like a 1:4. A 1:4 risk to reward ratio. So let's zoom in. My previous day low is my full take profit. Right, let's see how the trade is gonna play out. Now let's see. The trade is still consolidating, and boom, now full TP has been smashed with a 1:8 risk to reward ratio. You can see this clearly for yourself, right? A 1:8 risk to reward ratio now, and full TP smashed. Very simple and easy. Now follow the rules I've given you. The first rule is you go over to a daily time frame, then you mark out your previous day high and previous day low, then you indicate your accumulation phase, then you wait for the price to sweep the liquidity resting above the previous day high. This is the previous day high. This line I marked out. Remember, you were here when I marked it out. So as the price has gone up now to sweep all the liquidity, I wait for a market structure shift. You should know what a market structure shift is, which is on a 15-minute time frame, right? Once the market structure shift has happened, then I take my trade from the next order block. Now to get a perfect trade, I will advise you trade this at key levels, right? Take this same trade at key levels. Now if you want to master this strategy, you feel, hey bro, you didn't explain the strategy properly, I didn't get the strategy properly, and you want me to teach you how I trade this, you want to understand the strategy properly from me, then there's a link in the description, then you join my class, right? It's a very simple strategy, and without what I've explained, I'll go back to your chart and start doing same thing, right? Start doing same thing and see for yourself if it's working.